Hello everybody and welcome to another amazing video of DIY investing. For today's video, we are going to be mapping out Bitcoin, Ethereum, and our 4-year cycles because now with the institutions getting started, we need to talk a little bit about how this cycle may or may not differ from the prior ones. Every single one of our bull markets up to this point has been 3 years up and 1 year down, and this cycle is proving to be very similar up to this point. With us now getting closer to that breakout into price discovery, the majority of our upside potential is going to be setting in very soon, and now we need to be knowing exactly when we can look to take profits, how we can trade this cycle and make sure that we're getting out at the right time, and most importantly, knowing when the projected cycle low is going to be to buy back in and compound these gains. Thank you guys so much for tuning in. If you find any value in this video, please do me a favor, hit that subscribe button. And if you want to see anything that I'm buying, selling, trading over this cycle, all of our altcoin picks, links are in the description, and go ahead and sign up on my website. Thank you guys so much for tuning in. And with that being said, let's jump right into this amazing video today. Alrighty everybody, here we are to start off today's video, and we're going to be talking a little bit about some of the news that's recently broke. It's good to start out with some of the news because this is going to give us a foundation as far as what is happening inside of our crypto markets. We've seen a lot of big updates inside of the market over the last few weeks with Donald Trump pivoting pro-crypto, with the Harris administration doing the same, and now with the SEC kind of taking the backseat approach. We're seeing a lot of new infrastructure and development that's going to be taking place very soon just because we now have more clarity inside of our regulations. A big thing I want to talk about today, the SEC backs down on claiming Solana, ADA, and Matic, other tokens, are securities in the Binance lawsuit. For you guys that don't know, we have currently been going through the Binance lawsuit for a little while now. The SEC sued Binance in the last year, and then they've been going through those court proceedings ever since. In that period, they named a few different cryptocurrencies as securities, and we ended up seeing those cryptocurrencies fall a lot in value. Some of the ones named were Binance Coin, Solana, ADA, Matic, Atom, Sandbox, Decentraland, and Axie Infinity. All of these were different cryptos that performed very well in the last cycle that we ended up seeing get absolutely smashed once that lawsuit came out, once they classified those as securities. We've been talking a lot about what this means moving forward, why we need to see good positive crypto laws and regulation so that we can ultimately see the development of this infrastructure go live. Now, the next thing I want to talk about was the Bitcoin price falls 4.5% after the US government moves their Bitcoin. So this is something that has been talked a lot about. The Bitcoin supply that the government has is a significant amount. We just saw what happened when Germany went through their selling of their Bitcoin holdings. They sold about $4 billion worth, and we saw the Bitcoin price go from upwards of $67,000 all the way back down to about $53,000. Now the US government has started to move some of their Bitcoin holdings valued at about $2 billion, and we're seeing that on chain currently right now. Now the question is, are they going to end up selling it? My belief is most likely. We saw Trump just come out and make a statement saying that he was going to be going and holding all of the government Bitcoin if elected, and then 2 days later we see that the government is actually moving their Bitcoin on chain, looking like they're going to be distributing this so that they can actually go about selling it. This is what ended up happening and taking place right after the government of Germany started liquidating their holdings. Of course, that was double the amount of Bitcoin that we're going to be seeing sold by the government right now, but nonetheless, if we are to see some more sell side pressure, it makes sense that as we're approaching this upwards of resistance, being around 70K, I wouldn't be surprised if this made a pullback somewhere back around this mid-range before we ended up getting that next breakout. So just be aware of that. It's a fundamental driver that we should see the Bitcoin price actually sell off a little bit if the government's going to come out and actually liquidate some of their holdings. Considering $2 billion is a significant amount of sell pressure, we saw what happened when $4 billion actually hit the market just recently. Now, what I want to talk about isn't so much the shorter time frames. I wanted to zoom out and take a look at our long-term perspective and analyze the 4-year cycles with Bitcoin, and I also wanted to analyze the 4-year cycles with Ethereum. So we're going to be going through here and we're going to be taking a look at both of these different charts because there isn't any more important cryptos in the market than Bitcoin and ETH. They've been the driver of value up to this point, and I firmly believe that we're going to continue to see that play out over these cycles. So we're going to remove these drawing tools. I'm going to zoom out and we're going to go and start taking a look at these 4-year cycles because Bitcoin has been around for a long time and Bitcoin's been creating these 4-year cycles for a while. However, Ethereum hasn't been. Ethereum's only been around for about half the period of time, maybe even less than half of that time. And so we're not going to be having quite the same amount of data to pull from, which is why I wanted to show you guys Bitcoin at the start so that we can get a deeper perspective as far as what is taking place today inside of Ethereum. Is Ethereum following a 4-year cycle? And if so, how can we trade this and look to actually make money off of this trend over our entire bull run? So if you guys remember, what we're looking at here when analyzing 4-year cycles is peak low of the bear market to peak low of the bear market. The distance in between should equal 4 years. We know that with Bitcoin, every 4 years, Bitcoin bottoms and completes a 4-year cycle. 4 years equals 1,450 days. This bear market low to this bear market low was 1,428. So we're only a month difference. And that is truly what I think is so amazing about these patterns is we see the crypto prices following so perfectly to these trajectories. We can analyze every single cycle low of our bear markets, and we can see the Bitcoin follows perfectly to these 4-year cycles. This cycle low in 2015 all the way to our next cycle low taking place at the end of that 2018 bear market was almost exactly 4 years. And we can see the exact same pattern play out once more. If you take a low from our 2018 cycle low and you go all the way over to our most recent bear market bottom that we saw after the FTX collapse right here, we can see that it was the exact same amount of time from cycle low to cycle low. And we're going through this over the course of the last 8 years. And so with that, with us now actually completing another 4-year cycle, it starts a new one in its place. And it's not coincidental that the price of Bitcoin just started rising ever since that major low. Now, the question now comes, does Ethereum follow these same cycles? What is Ethereum doing in the comparison with Bitcoin? And the truth of the matter is this. Bitcoin completed its 4-year cycle all the way back here in 2015, but Ethereum hadn't even been added to exchanges. So even though Bitcoin and Ethereum both rallied together in that 2017 bull market, you can't really draw this as a 4-year cycle with Ethereum because you have to measure from the peak low. Ethereum didn't even exist at Bitcoin's peak low after that 2015 bear market. So we can't really compare that first cycle as much. We have to now go into our most recent cycle low and draw it from here because we know that Bitcoin bottomed at the very ending of that 2018 bear market, completing a true 4-year cycle from 2015 all the way over here to the end of 2018. And this is where we're going to have our first true cycle low for Ethereum to draw. Now, from that point, if we come over and take a look at about 1,450 days, we're going to be pretty much putting us right around that FTX collapse. But if you notice here, Ethereum's peak low was right here at about the midsummer of June 2022. And during that FTX collapse, we didn't actually make a lower low. So truthfully, even though Bitcoin's lower low came and we ended up seeing it make a breakdown from that consolidation, Ethereum never ended up breaking down. And so we ended up bottoming a little bit earlier. And this is why I say that if you're following the 4-year cycles, the best thing is to follow Bitcoin because many of the altcoins aren't going to sync up to the same consistency that we do see with Bitcoin. We can see that Bitcoin every 4 years perfectly follows, and both of the last 8 years, if we're looking at the last 2 cycles, they followed the exact same amount of time, both 1,428 days from cycle low to cycle low. And then if we're also analyzing the bear market, the 2018 bear market was about 364 days. And if we're looking at the top of 2021, that was also 364 days. So both of the last 2 cycles have synced up perfectly to this trend. However, with Ethereum, it's a little bit different. Notice here how in the 2018 bear market, this was about 365 days. It was just under that, but pretty damn close. You know, you can pretty much just call that the same thing. And then if we're looking over here at Ethereum in our last cycle, this bear market was a lot shorter. Its bear market only lasted 217 days, and we never made a lower low from that point. And so this is why I say that the best thing to do is focus on the 4-year cycles with Bitcoin. Take your profits on the altcoins around Bitcoin's 4-year cycle, because we know that Bitcoin peaked over here in 2018. Ethereum also peaked at that exact same point. Now, if we come over here and take a look at our last cycle, Bitcoin peaked at 69,000. Ethereum did the exact same thing. So regardless of the discrepancies that we may see from how long the bear market is and how long the entirety of the 4-year cycle is, we can prove based off the charts that Ethereum really doesn't follow the same consistencies as what Bitcoin does. However, we can see that Bitcoin's syncing up to these 4-year cycles. Once we knew that the 4-year cycle low was in, basically being the end of 2022, what we ended up seeing was Bitcoin instantly started to reverse out of those lows. Ethereum did the exact same thing. The only difference here is Ethereum ended up bottoming a little bit earlier, and so it wasn't as good of an indication, it wasn't as good of an index to pull from as what we see with Bitcoin. Regardless, they both followed the same things. We can see that the price action is very much the same. The only difference is Bitcoin has outperformed, and that's something that has played out every single one of our cycles. At the very beginning of a new 4-year cycle, Bitcoin always outperforms the altcoins, and they really don't do a heck of a lot until once Bitcoin gets outside of those prior all-time highs. That's when the real upside potential sets in, and we can see that over in here. If we're taking a look at our 2018 cycle, and we draw a line from that prior all-time high at 20K all the way to the point where we made a new all-time high, this is where Bitcoin started making a new all-time high. And we can see that Ethereum was still relatively far below those prior all-time highs. You know, you're looking at about a 40 to a 50% gap from Ethereum hitting its prior all-time highs versus the point Bitcoin actually made a new all-time high. And it was kind of at the very ending of that impulse for Bitcoin that we saw the bulk of that upside potential set in for Ethereum. And so as we've seen Bitcoin starting this brand new cycle, as we've basically made a new all-time high at this point, but not quite. We're still consolidating below those. I wouldn't consider it a true breakout quite yet. But what we're looking at with Ethereum is it's still sitting pretty far below those prior all-time highs as well. Not as much as its last cycle, but we can see that we're still down around 20% from those prior all-time high levels, whereas Bitcoin's getting ready for that next big breakout. So the best index that we can pull data from is always going to be Bitcoin. It's the oldest. It follows the 4-year cycles the most. And with Bitcoin now approaching that new all-time high breakout, you know, Ethereum doesn't have to be following a true 4-year cycle. You know, it didn't bottom perfectly 4 years away. It was close. 1,281 days is pretty close to 4 years, but it's a big enough gap that we can't really consider that a true 4-year cycle. And if you're looking at many other altcoins in the market, most of them are going to even sync up to the 4-year cycle less than Ethereum does. So there's really nothing to pull data from other than Bitcoin when we're analyzing our true long-term cycles. But the big thing here is we can still follow the 4-year cycles and trade Ethereum, because if we're looking at Bitcoin following another 4-year cycle, Ethereum's just going to continue to follow Bitcoin. And so with us actually completing our most recent 4-year cycle, exactly 4 years from the 2018 bottom happening at the end of 2022, we started a brand new cycle in its place. And historically speaking, if we're actually taking a look at Bitcoin, which I'm going to actually remove Ethereum real quickly so that we can just take a look at this. If we're looking at Bitcoin, historically speaking, from peak low to the cycle top, we have a 3-year uptrend and a 1-year downtrend, 364 days here, and then the entirety of that equals 4 years. And both of these are syncing up to our cycle lows each and every time. And that's the way that you would trade these 4-year cycles. And so when we're taking a look at where we're at today, or what I should say in the last cycle, we saw the same things. From peak low all the way to our cycle top was 1,064 days, the exact same amount of time as our last bull market in 2016 and 2017. So what we've seen, 3 years up, 1 year down, and then at the end of that 1 year down, it's exactly 4 years from our last cycle low. And that's the way that these cycles are going to mirror each other each and every time. Now the question has come, are we still following that same pattern? Is there a little bit of a difference this cycle? And I've talked a little bit about what those differences are, but what we can say for sure is that Bitcoin bottomed exactly 4 years from our last cycle low. That is following a 4-year cycle. So regardless of what is taking place currently at the beginning of this bull run, we're still inside of a 4-year cycle. Now, we're going to talk a little bit about how that may differ. Right off the bat, if we're looking at us topping and following this same trend that we've been at for, the last 10 years approximately, we're looking at about 1,064 days to our cycle top. So that's going to basically be sometime at the end of October 2025, mid to end October 2025. That is going to be giving us that exact same amount of time inside of each of our last cycles. So if we're looking at that, we know that we still have a decent amount to go before we're at that point, talking about 434 days approximately, about a year and a half before we're at that same topping point. Now, if we're looking at that, where's our 4-year cycle low going to be taking us? Well, if we're analyzing from peak low of the most recent bear market bottom we saw at the ending of that FTX collapse, we're looking at about 1,428 days. 1,450 days is technically 4 years. And so we're going to draw a line right there because we want to be following the time more so than we want to be following the consistency of the last cycles, because we know that these things can differ. Just because the last 10 years have been exactly the same doesn't necessarily mean that our cycle is going to 100% be that same sort of way. I would love to see that. I mean, it's easier to follow along with that, but generally speaking, the more that the price is going to follow something, there's going to be a point where it's going to differ from that trend. And even though we've been following a 4-year cycle up to this point, the question now comes, are we going to see an early cycle top, or is this cycle going to end up being very much the same as our prior ones? Well, regardless of that, we're looking at 4 years from our cycle low taking place at the end of 2022. You're basically looking at that being the very ending of 2026. That is going to be giving us our next projected 4-year cycle low. So if we're going to be following a 4-year trend, the question comes, where is the cycle top going to be taking place? Because the one thing you need to be aware of is the cycle low to cycle low never changes. The 4-year cycle from peak low to peak low never changes. What changes is where the cycle top comes. Just because we've seen a 3-year uptrend and a 1-year downtrend over the last 10 years doesn't mean that we're going to continue to see a 3-year uptrend. Maybe we only see a 2.5-year uptrend. Maybe it's only a 2-year uptrend before our cycle top. The one thing that stays universally the same over the course of our 4 years is the cycle low to cycle low. That's the only thing that we can continue to focus on over these entire bull runs, because the way you measure a cycle is always peak low to peak low. The ups in the peaks inside of the bull market, those can always fluctuate and they can change. The one thing that always stays the same is the peak low to peak low, because it's at the very bottom of the bear market that the uptrend starts. And so that's the true way that you would analyze one of these cycles. So if we're looking at, basically us following a normal cycle, we'd be looking at us peaking sometime at the end of 2025. That would be giving us, the typical sort of 3-year uptrend, and then that would start us into that 1-year bear market. Technically speaking, 1 year from that cycle top would be around like October. However, 4 years exactly from our cycle low that we took place over here with the FTX collapse, that's going to be closer to about November of 2026. Regardless, it doesn't really change anything. The one thing that is most important is knowing that we're going to be bottoming at the end of 2026. That is the one thing that we can count on being the same. However, the one thing that can differ is where this cycle top takes place. We know that in a sense we've been distancing ourselves a little bit from these trends. In yesterday's video, we talked about how every single one of our bear markets, analyzing from the cycle top to the point of us making a new all-time high, it gets about 100 days shorter each and every time. And we can see that over in here from 2013 to the all-time high was actually 1,200 days. We can see that in 2018 to the all-time high was about 1,100 days, so just 100 days shorter. And we can see that from our cycle top in 2021 to the point of us where we're at right now is about just under 1,000 days. So we know that we're at a little bit of a quicker pace each and every bull market, but it's not such a significant margin that we have to draw major conclusions quite yet. If we're looking at this cycle being different, let's talk a little bit about what that's going to look like. I'm going to remove my drawing tool so it's a little bit easier for you guys to see. We're going to go from this cycle low being the ending of our bear market bottom, and then we're going to draw 4 years in advance. That's going to be taking us to about 1,450 days. That will be the end of November 2026, the very ending of that year. And this is our entirety of the 4-year cycle. So we're about halfway inside of this move. Maybe a little bit less than half, but pretty much right there. We still have a lot more upside to come. And if we're looking at our last cycles, the majority of that upside sets in once we get outside of that all-time high. In 2017, we saw our biggest cycle, and we can see that that was the majority of that bull run was what took place after all-time highs. However, in our last cycle, we had the pandemic. There was a lot of over-leveraged players manipulating the market, and we didn't see quite the same price discovery. I do believe that this cycle will compare a lot more consistently to what we saw in that 2017 trend. And so now we need to talk a little bit about how it can change. Is our cycle going to differ at all? Are we going to see something a little bit different? Well, the truth is, so far, we're currently at about 630 days inside of this bull market. If we're looking at our normal cycle top, we're looking at it taking place sometime at the end of 2025. However, if we were to see Bitcoin's price start breaking out here and going into an absolutely massive move, and we're sitting over here at maybe $150,000 and we're still pretty far away from our true projected cycle top, we could be looking at what is known as a left translated cycle. And inside of a left translated cycle, it's where you end up peaking early inside of the bull run and starting a longer bear market. Because the one thing that, like I said, stays the same is the peak low to peak low. Our bear market bottom is going to be taking place sometime at the end of 2026 because we've been following these 4-year cycles up to this point. The one thing that could change is if we have an early cycle top or if we just have a normal 3-year bull market. Those are the only things that are going to be changing in this cycle. So the way that we would know how to actually determine that is you would be going half of 1450, so 725. That will give us our mid-range point. 725, basically right here, we're going to draw another point of interest. We can see that if we're topping on the left side of this mid-range point, that is what's known as a left translated cycle, because this is on the left side of the mid-range point, right? This is the mid-range, this is the left side of the mid-range point. This is the mid-range, this is the right side of the mid-range point. So this is the difference between our cycles. If we're looking at our last bull runs, we've always followed right translated cycles. And I can share with you guys that right here. If we're going from our peak low of 2018, 725 days over, you're pretty much looking at every one of these cycle tops taking place on the right side. Remember, mid-range point, left translated cycle, mid-range point, right translated cycle. Where did we peak at our all-time high? Well, it was on the right side of this mid-range point. So this was a right translated cycle. When we have a right translated cycle, it generally just means that we're going to continue to follow those same patterns. In this case, normal 3 years up, 1 year down bull markets. We can even come back into that cycle over in here where we bottomed in 2015, and we can see the same similarities here. From the peak low of that 2015 bear market bottom, 725 days over, where did we end up peaking? Well, we peaked significantly over here on that right side of the mid-range point. So every one of these bull markets has been a right translated cycle. And that's why the only real difference that we're going to be seeing inside of our current cycle is whether we peak early or whether we peak on a normal sort of trend. And that is why I think that it's so important we're talking about this right now, because as we're getting closer and closer to that mid-range, this is the first time that Bitcoin's ever been at these prior all-time highs, and we're still over here pretty close to that left side of the trend. So if Bitcoin was to make some massive breakout and we rally all the way up to $150,000, $170,000, and we're still on this left side, I'm personally going to be leaning towards us having a left translated cycle. And the only difference would be this circle right here is where our projected cycle top is going to be. That's the end of 2025. So we can see that we're still 430 days away from that level. However, if we were to get a big breakout and make an absolutely massive blow off top relatively early inside of our trend, maybe behaving a little bit more like this, only we never get that secondary top, we're going to be looking at a left translated cycle where instead of us having a normal 1 year bear market, 3 year uptrend, we would be having a lengthier bear market. Basically, if we peak at like the end of 2024, sometime, that would be this year, we'd be looking at us bottoming all the way back at the end of 2026, but it would be a 2-year bear market rather than a 1-year bear market. Because like I said, guys, the one thing that stays the same when you're analyzing the time frames of the cycle is peak low to peak low. You're never analyzing peak high to peak high because that's the one thing that can change. Just because our last 2 cycles followed the same trends in our bull markets doesn't mean this cycle is going to do the same thing. We have been at a little bit of a quicker pace up to this point, technically making a new all-time high at about 850 days from our cycle top, and that was just something we've never seen up to this point. Because we got this 4-month correction, it put us a lot closer to this mid-range point. And so it's hard to say exactly where our cycle top is going to be, but I will say that if we end up following a normal trend, we're going to be looking at this being a lot more of an impulsive cycle, taking us into some type of cycle top at the end of 2025. If this gets us our blow off top prematurely, we get a lot of hype that comes in here, a lot of retail driven mania and euphoria, I wouldn't be surprised to see us actually peaking on the left side of this mid-range for the first time ever. And if that was the case, the only difference isn't so much where our cycle bottom's at. That's the one thing that we know is going to be the same. We're looking at our 4-year cycle low being at the end of 2026. That's going to be a given. The one thing that is going to change is how long is our bear market? Because if we peak at the end of 2025, you're pretty much looking at a 1-year bear market, right? 1 year from the cycle top to our projected cycle low. However, if we're peaking all the way over in here at the end of this year, having an early blow off top like we haven't seen up to this point, we're looking at about a 750-day bear market. That would be twice as long, a 2-year bear market versus a 1-year bear market. And that's why I say, guys, with the institutions being here, institutions are always here right before we get to the point of them taking profit. Institutions couldn't have bought all the way back down in here because there just wasn't enough liquidity. There wasn't enough cryptocurrencies as a whole for them to be able to actually go in and input all of their billions and billions of dollars. The prices would have just exploded. And even though that's still something that's going to be happening now with this cycle, there is enough liquidity for them to actually pull from. And so that's why I think that if we are going to have an early cycle top, it could be influenced just because of the institutional demand, followed by the retail demand that we're going to see shortly after, because the retail investors are only going to be here for exit liquidity with the institutional investors. If we look at the valuation of a market cycle, this perfectly puts it into perspective. Now, we don't know how the 4-year cycle is going to perfectly factor into this. The only thing that we know is that it's either going to be peaking a little bit early, and we'll probably be having maybe a 1.5 to a 2-year long bear market, or we'd be looking at a normal cycle top taking place sometime at the end of 2025. That would be 3 years up from our cycle low and the beginning of our new bull run. However, if we're going to see something different, I wouldn't be surprised if these institutional investors come in here and drive the price of Bitcoin up substantially in order for them to actually realize a gain and take profits. Because the one thing that I have a constant disagreement with is people that assume that just because the institutions are here, they're going to continue to drive the prices higher, it'll just forever go up, and they're never going to sell anything, because that's just not the truth. The truth is the institutions are here, and then they're going to get to their mainstream news buddies. The media attention is going to pick it up. They're going to talk about how Bitcoin's the future, how it's better than gold, all of these things that we've talked about forever and ever if you've been in crypto. And that's when you're going to see the public really get a hold of this new investment. They're going to jump into it heavily. You're going to see people selling their houses, taking profits on a number of their other assets, pulling out their 401ks at the worst possible time that you can. And that's where you're going to get into this mania phase. The question I have is, are we going to see this mania phase take place early, leading into an early cycle top, or is this going to be a little bit more like our prior bull runs? And I can't answer that specifically, but I wouldn't be surprised if where we're at right now is that first sell-off before we get that big push from the institutions. And now the question comes, do we peak on the right side? Do we peak on the left side? I don't know, but I'm going to keep you guys updated for sure, because regardless of which scenario takes place, now is a very opportune time for crypto, because even if we have an early cycle top, I still think that so much adoption is going to take place inside of that move. And if we're to see Bitcoin rocket here from 70K all the way up to 150K in a relatively short period of time, we have to anticipate the potentiality of this being an early cycle top, of this being, a difference inside of our 4-year cycles. The one thing that's going to be different is where the cycle top takes place. The one thing that will stay the same is where our cycle low is going to happen. We're going to see the cycle low take place at the end of 2026, because that's the way you measure a 4-year cycle. Because we bottomed perfectly 4 years from our last cycle low, it proved that we are now following a new 4-year cycle. The one difference is going to be the cycle top, because you never analyze a 4-year cycle based off the cycle tops, because that's the one thing that can change. The only thing that stays the same is the cycle low to cycle low. So we now have to, ask ourselves, are we going to end up seeing this thing peaking early, or are we going to end up following kind of your conventional blow off top, where, let's kind of make this a little bit easier to see, where we end up peaking sometime over in here, where maybe we go all the way up to like $250,000 per coin in this cycle, and then that's going to be taking us at the end of 2025. This is what I was leaning towards after we got this long-term correction. I still don't know for sure, and nobody is going to know, but if we start seeing just pure euphoria take place inside of this next breakout, I'm personally going to be taking profits and hedging that risk just because of this potentiality. If we are to see, more consistent uptrending, where maybe we come up to 100K, we pull back, and then we do some more stuff like this, at that point, we're going to be clear over here on the right side of that mid-range, and I'm going to be leaning towards us just having a more parabolic true 4-year cycle, and it would be something along the lines of that. But if that was going to be the case, this would be the scenario that I would be leaning towards, where we have these big impulses. Bitcoin's rocketing upwards of $250,000, but we're having these pullbacks. We're having these periods of reaccumulation as we're getting steeper and steeper. If we were to just see Bitcoin instantly teleport upwards of 150 to 200K in a very short period of time, and we're still on the left side of that trend, I'm personally leaning towards this being an early cycle top, but this is the only way that we can really draw and, compare anything. It's through the 4-year cycles, and Ethereum doesn't follow the 4-year cycles like Bitcoin does. We're knowing that when Bitcoin gets to the ending point of that 4-year cycle, that's when we take profit on all of our altcoins, because the altcoins will probably outperform during that period. But as long as we're taking profits, knowing that Bitcoin is at the ending of that cycle, we're going to be much better off than anybody else in the market. So guys, if you did find value in this video, please do me a favor, hit that subscribe button. If you want to see anything that we're buying, selling, trading over this bull run, especially as we're getting into a new all-time high, definitely got to sign up for my Discord server. I'm going to be posting some new signals inside of there, looking at some final buys inside of my portfolio. If you guys do want to check that out, links are in the description to go ahead and sign up on my website. With that being said, I want to hear you guys' comments. I want to hear what you guys have to say about this. What do you think is going to be happening? Do you think we're going to have a normal 4-year cycle, or do you think that we could have an early cycle top? I'm curious to hear your guys' perspectives. Drop them in the comments below. And with that being said, have a great day. I will catch you guys in the next one. As always, peace out.